Welcome everyone, it's Enrico Janko. I'm Signal, powered by the mighty Team Alliance. Let's get back to our lesson on Wicks. This is part 2 of our Wick lesson. Alright, so we're on slide 3. Alright, I think we talked about it a little yesterday. We'll go back over that a little bit as we go on to the next slide. So let's see. This current bar we're looking at right here is important because of the long wick. This extended wick we're looking at right here, right? So the extended wick is interesting because it extends all the way down into deep bear territory, right? So we all the way down here, we know that is bears down here. This is a seller's area, right? Because it's going down. Very simple. There's a lot of more sellers at these prices. We know there's sellers down here because the price was able to move down there. Price likes to take the path of least resistance, sort of like water. So the reason the price was able to make it all the way down here is because that's where the least resistance was, right? And so that's where it went to, right? It was more difficult for it to buy at that point than it was to sell at that point, right? But as it sold all the way down to that point, you see that you have this long wick, which shows the speed in the market really pressing it all the way back up. They're buying all the way back up. All right? So there's a couple of things that could have went on here. There are possible buyers down here at these prices. Well, we know there are some buyers down here because it would have to be necessarily have to be, because that's why the price was able to move up. So there are some buyers down there. We definitely know that. But we don't kind of know what type of buying. That buying could have happened because sellers were actually taking profits down here, and they were leaving out of the market, and that made the market surge all the way up, like if there was a lot of sellers just coming out the market. And that's a possibility because if you look at this extension, it's kind of like almost like the second or third leg. You might call this one leg, and this one a second leg, excuse me. So this is whole extension. Usually, a lot of times the market moves like with those 2-3 extensions or whatever, two legs. So it could be a lot of sellers left the market taking profits. The buys also could be what we call just standing by orders, also just waiting to be sprung into the market, right? Like they're just buy orders waiting here that are just sitting, kind of like pending buy orders. So when the market reaches there, those orders are opened, and whoever has those orders are, popped into the market. Another telling fact about this current bar, the body of this bar is lower than the body of this green candle. And why is that important? Or why does it have any significance? It has a level of significance because if you were in the market here, right, you came into the market, you was a buyer, and you bought wherever you bought at. Say you bought all the way down here at the low price, right, of the body. Now we wouldn't know all this stuff, these 3 candles coming, but if we would just imagine it in our head what was happening. I just bought, and the next candle was this little cross right here. All right. When I see that, I'm not too worried. I'm like, well, that looks like it's a little indecision in the market. Everything be fine. It's going to go in my favor. After it makes up its mind. After I see this candle, I'm watching it, and I saw the market go actually all the way up in my favor. So I'm like, yes, yes, I did this right. And then what's happening? I see all this pressure right here, all this selling pressure. Market goes down. I'm still not too worried about it though, because the market, I'm calling it volatility. Oh, it's a lot of volatility in the market. So I'm still, as a buyer, I'm like, it's okay. The price is going to go up again. Now on this candle, it's clear that the price is not going up. This body closed below this candle. This what word am I looking? This bull candle. Excuse me. So the body closed below this bull candle. So if I was in here and I bought, and the market closed down here, what am I going to do? Now I'm kind of shook, or whatever. And I want to back up first, because I keep talking about if the market closed. Let's just say we was just the market, we just in the market, right? And it hasn't closed yet. If we have bought, and then we would be in the market, and the market would have went all the way down here, right? Then came back up, right? So this would let me know that there's a lot of selling going on, and what's possible is that at some point these buyers are going to get real scared, and they're going to have to come out the market, right? That's what I would be looking for, right? And I know that sounds like a lot of different things, and it's a lot of different little points there, but as we go along, it's going to be a lot clearer, right? Remember, we're just on part 2 of our Wick lesson, and this is like the 3rd slide. We got about 20 slides to go through to look at Wicks and how this particular setup happens, right? So let's go to the next slide here. All right, this is kind of pretty much the same slide right here. You're seeing that, I'm sorry, you see here on this next candle, what are we talking about? Remember, we said that when the price got down lower, that anyone that was buying, they would be having to come out the market, right? They would be getting kind of a little nervous, and then when they get nervous, they're going to get out the market. So what they have to do, they have to sell, right? And right here we see some selling going on, right? So the bears, the selling is continuing on. It stopped the bull pressure right now, but we notice that there is still a little bit of it, because that's why this candle is here and not all the way down, because there is some bull pressure still. I want you to notice that on that bull pressure though, right? See how that wick right there? That's the bull pressure, right? Notice how it only made it up halfway to this halfway point of this candle, right? Why is that significant? Because a lot of times these halfway points are magical numbers. They line up a lot of times with other numbers in the market that are deemed magical, and so a lot of times traders will watch that, especially if you're watching the market and you see the market as it did here, bull up, and it can't make it past the halfway mark of a candle before, and it gets rejected. It's letting you know that must be a lot of pressure going on, right? So on the bear side of this candle, you're going to see some lingering bulls in the market also, right? So the sellers clearly in demand, but this is a wick. This is a wick, right? So we know that there is buying going on, It's all about what type of buying, right? Because if it's not strong buyers, and strong buyers, I mean, with people with buy orders, they're actively buying, not people taking profits or kind of hopping in and out. People that are buying for a position for it to be worth it for them, they're going to make sure it's a strong buy, and it's going to come at a point in the market where they have almost a 95% sure that it's going to move the market, and they're going to be on the right side of it, of that movement. So that's kind of how that is looked at. So we go on to the next slide. This video is about 11 minutes. That's about 11 minutes. So we're going to stop at this slide. We'll take a peek. Well, since it's one more leg, I'm going to talk about it. This leg right here is kind of like this extension of the one before. It's just really just basically, it makes a full leg. So, you know, you got this one extension of one leg, two legs, kind of, where multiple candles are making one leg because it's functionally doing the same thing. Notice again, more selling going on, right? There is some hesitance. You don't see the market just dropping down. There's bulls hovering around at these lower price levels, right? And these loitering bulls, these bulls that are just hanging around all the way at these lower price levels, they're keeping the market on this level of indecisiveness, right? They're keeping it, the market looking sort of like a little cross or doji, whatever you might want to call it. But the bear is just loitering around this bottom, right? They're testing the 1.3070 mark through the 1.3069 mark. It might move a little bit more than that range, but I'm just thinking about looking at the main region. And the bulls down there at the 3069 mark, they show some levels of strength, right? Whether it's enough, we don't know yet, because all we can do is wait for the information to be printed and then interpret it as it comes along. And hopefully we're interpreting it correctly. All right? So once again, it's Enrico Janko. I'm Signal. And this is lesson number 2 of Wicks. You got any questions, comments, concerns, just leave them down below and I'll definitely answer them for you. And stay tuned for lesson 3 or part 3 of lesson 1 Wicks. All right? See you guys.